from Q1of4 Solutions. You're currently watching support videos for the British International Distance College Accounting module for grade 11 and 12. There's more information on our website www.q1of4solutions.com, and consider following us on Instagram and Twitter, and watch our YouTube channel for more support. There are more specific videos covering different accounting sections on the YouTube channel, and you might find that helpful if you're struggling with some of the basics for accountancy. The third-party disclaimer: the material in this video is based on information, products or services by third parties. Third-party materials comprise of the products and opinions expressed by the owners. As such, I do not assume responsibility or liability for any third-party materials or opinion. I cannot guarantee the accuracy of the information contained in the third-party material. Presentation of such third-party material is simply used as a tool for assisting viewers with answering questions for educational purposes. All trademarks appearing in this guide are the property of the respective owners. In the IGCSE Accounting Assignment Pack, one of the rules states that all resources may be used when answering assignments, including textbooks, the internet, tutors, etc. Q1of4 Solutions is a private institution and is in no way connected to the British International Distance College. Any reference made to the subject material referred to official BIDC material, and we do not represent them as our own. We simply work through BIDC material with students as a means of additional academic support. You guys are definitely on the road to success, because I'm hoping that all of you have gone through the chapters in the actual textbook that's going to allow you to answer the questions in the assignment. I'm going to be taking you through my workings for this particular assignment to show you what you should be focusing on when actually creating one of these solutions. You'll see assignment 3 tests quite a bit of theory as well, so I do encourage you guys to do some additional reading. There are questions that can be used to practice and to help you prepare for your actual examination that you'll write at the end of the year. If you need to contact us, feel free to DM us on Instagram or tweet us on Twitter, and if you want to, leave a comment below on the YouTube channel and we will respond. So we're looking at assignment 3. Let's begin. Let's look at question number 1 from assignment number 3, which is on page 38. Question number 1 has two parts, 1A and 1B. The question states, the following balances appear in the ledger of Paul Silver at 1st of Feb 2015. Rates, bracket debit balance, $220, motor expenses, credit balance, 170. That's given in the actual question. Then they say on 10 April 2015, Paul paid $1,800 by check for rates. This was for the year ended 31st March 2016. During the year ended 31st January 2016, Paul paid a total of $2,050 for motor expenses. At 31st January 2016, he owed the garage an amount of $290 for motor repairs. Then they say write up the ledger accounts for rates and motor expenses for the year ended 31st of Jan. Show the amounts transferred to the income statement and the balances brought down on 1st Feb 2016. Part B says Paul's income statement for the year ended 31st Jan 2016 has not been adjusted for the 75 rent receivable prepaid. State how his capital will be affected when this error is corrected. That's what they've given us. So now we have to actually apply this to our workings here. The first step is to draw a timeline in terms of start of the year and end of the year. I need a year end. Well, the required said write up the ledger accounts for motor expenses and rates for the year ended 31st January 2016. So let's put that in. 31st January 2016. That's the year end. Year end. So if we've got 31st January 2016 as the year end, the start of the next year would have been 1st of Feb 2016. That would have been the start of the next year. So I'm looking for 12 months. The start would have been 1st of Feb 2015 then. 1 Feb 2015. Let's see, 1st of Feb 2015, a full year would take it to 1st of Feb 2016. Yes, okay, so that would have been the start of the financial year. So if we've got the start of the financial year and the end of the financial year, we're then going to have to account for adjustments that take place during the financial year. So let's go back to the information and let's see what are we required to do. Well, they said ledger accounts for rates, so we can put that in. They said rates has a debit balance, so we know that has to be recorded in this actual account. Then they also tell us that we have motor expenses, and they tell us in the question that this has a credit balance. And obviously, if we're starting with the balance, we need to insert that into the actual table, or let's say tier count. So 1/ this was at the start, 1st of Feb 2015. So 1st of Feb 2015, we had a balance brought down, and we had a balance brought down here as well. For rates, it was a debit, so rates debit balance 220. And for motor expenses credit 170. So that's what we've done. We've inserted it into the actual table. Tier counts. Let's go back and now let's look at more information from the actual question. They say the following balances appear in the ledger, so we've recorded them. Then they tell us on 10 April 2015, Paul paid 1,800 by check. So 10 April 2015 would have been during the year. 10 April 2015, yes. 10 April 2015, 10 April 2015, Paul paid 1,800 by check for rates. So that was paid for rates. 10 April 2015, 10 April 2015, Paul paid 1,800 by check for rates, paid for rates. This was for the year ended 31st March 2016. So that was for the year ended 31st March 2016. We need to put that in. 31st March 2016. Let's read that again. On 10 April 2015, Paul paid 1,800. This was for the year ended 31st March 2016. Brilliant. So now we've got a payment there that extends later on, okay, over or after the 12 months. So we were obviously looking at that financial year, but we've made a payment there that extends after the year has actually ended. So there's definitely going to be a prepayment, but we need to then provide for that later. For now, let's continue reading and let's draw the rest of the scenario. Then they tell us during the year ended 31st January 2016, so that year, Paul paid a total of 2,050 for motor expenses. So during this year, he paid 2,050 for motor expenses. That's what he paid. Then they tell us at 31st of January 2016, which is there, he owed the garage an amount of 290 for the repairs. So at that point in time, he's owing them, so it's a liability. He's owing them 290 for repairs. That's what we're looking at. What else do they give us in the question? That's it. Then they say write up the ledger accounts. Fine, so we know those are tier accounts. And show the amounts transferred to the income statement and the balances brought down on 1st Feb. Great. So now we need to provide for what we have in the actual question. When looking at the information, we need to get our easy marks. So 10 April 2015 is during the financial year. So rates, which is here, the rates rates with the S, the rates here were paid. So if the rates were paid, we need to show that. This is the rates account, it's a debit, so the rates account would be seen as an expense unless this is the rates receivable account, which they didn't mention here because we would create a separate T account for it. So I'm going to show this rates account as an expense that we have in this particular book. Okay, so we need to differentiate between rates that are prepaid and rates that are an expense. Here they told us this was rates debit balance. Then they told us motor expenses with a credit balance. So they're telling us those actual accounts have a debit or a credit for that specific type of account. So here rates would be an expense and that will also be an expense, but we've got two different balances. I'm going to draw up another T account and another T account over here, and I'm going to be creating an adjustment account for them, because remember earlier we spoke about the rates paid here, and the rates that are paid here are for a 12-month period extending further after year end. So what is that viewed as? That's viewed as a prepayment. It's seen as a prepaid expense that we've incurred, and the reason for that is we've got an amount that extends after the year end. So we've got 1st of Feb to March. So we've got March and we've got February and March. We've got 2 months prepaid. That's what we've got. And obviously we've incurred that expense in the past. So our expense is actually too high. So we need to provide for an adjustment. So when looking at the actual payment of the expense, if I'm looking at this, I would have debited the expense, so the rates, expense increase, and I would have credited the bank, bracket, asset decrease. That's what I would be recording, because I'm looking at the expense and I'm looking at the asset that's being affected if I'm making a payment back in 10 April 2015. So I need to record that. So 10 of the 4th, 2015, bank, this would have been or captured in the cash payments journal, and I would have recorded the 1,800 as an expense in the rates account. They didn't ask you for any other ledger accounts. You could draw up a bank account if you wanted to. I'm going to show it purely as additional. So I would have shown bank here, bank, and obviously in bank you would have had the credit because you're debiting this account rates and you're crediting that account bank for the payment. So just to show that, I would have put in rates here and 1,800, fine. So that's what I would show in the actual bank. It'll obviously be part of your total payments, but I'm just going to show the other side just so you've got additional information. So if they do ask a question like this, you'll have both. Here they're only wanting the rates and motor expenses in terms of what is required. Then we need to provide for the motor expenses. So what happened to the motor expenses? Well, they told us that we paid 2,050 for motor expenses during the year. So that's during the year. Again, it's paid, so bank is going to be affected and the motor expenses is going to be affected. So bank is going to be credited and the expense, which in this case the motor expenses, will be debited. So 2050 goes there, and if you wanted to, you could show this here. We need to change the date though. I need to use the date they've given us in the question, which was during the year. So we'll assume this was during the year. During the year, we don't know exactly when it was paid. They just said during the year. So I'm just going to use the year end, which was 31st January, because I'm taking the total from the actual journal. And this was, in terms of journal, or year rather, this is January. So 1st of January 2016. Okay, the year end. So that would have been the total from the journal that we would have taken through to this particular account. Alright, let's go back and record the other half here. So 31st of the 1st, 2016. I would be showing a payment here for the repairs, motor expenses. Motor expenses. Perfect. So now we've got an idea of what actually happened during the year. There were payments made for motor expenses during the year, and we need to put the amount in 2050. Great. So that's the first bit. So now I've captured that, and I've captured this. Now we need to provide for the adjustment, because they say show the amounts transferred to the income statement and balances brought down on 1 Feb. So now I'm going to have to provide for the adjustment before transferring this to the income statement, which is a closing transfer. So if I'm going to be looking at the rates account, you should agree with this in terms of being an asset because it's a prepayment. So you've got February and March. You've got 2 months that have been prepaid. So let's calculate the amount per month. The amounts per month, or the amount per month, the amount per month would have been 1800 divided by 12, because it's March to April. So April, May, June, July, August, September, October, November, December, January, February, March. It's 12 months. So I'm dividing it by 12. That gives me 150 per month. So if I've got 2 months prepaid, I'm going to times that by 150, which is going to give me a 300 Rand prepaid expense that I'm going to have to recognize during the current financial year for the year end, because that's an adjustment. It's an accounting adjustment for a prepaid expense. So let's record that. At year end, do I want to show the full amount of 1,800 as an expense? No. The expense for the year must be the difference, meaning the 1,800 less 150 gives us 1650. That's the amount that you would recognize as an expense for the year that will be closed off to the profit and loss or the trading account. Obviously profit and loss, because trading account works out our gross profit. So in the rates account, we're going to have a credit, because we're going to credit this account to close it off, closing transfer, and we're going to move this to the profit and loss. And this will take place on the last day of the year. So 31st of this was the year end, so January/16. We would put profit and loss here, and we would go general journal here. That'll be a closing transfer, and the amount that I would be recognizing is the 1650. And then in profit and loss, so let me again just do some additional workings just to show you guys what would this look like. Let me do it here. Profit and loss. Okay, you're closing the account off, so you're literally going to be referencing this figure that you had there in profit and loss on the last day of the year for the rates. General journal. You're closing off the income and expenses to calculate the profit, and that would have been your closing transfer, to debit the profit and loss, to credit the rates. And then what happens to the other amount? Remember, we had a prepayment. Well, now we're creating that, so we'll call this prepaid rates expenses. Okay, and I'm creating 2 months seen as an asset. The prepaid expense, you should know from your theory, is an asset, so it'll have a debit balance. You're creating it. So I'm creating 2 months, and I'm going to then create it at year end. So 31st of the 1st, 2016, this would have come from the rates account, general journal, and there would have been a prepayment that you're creating. So I'm crediting this account, and I'm debiting that account. And the amount here is 150 times 2, which is 300. Hold on, I only subtracted amount per month. I should have subtracted the 300, not the 150. That was 1 month. That was a mistake. Sorry about that. Let's quickly fix that. Okay, 1,500. There's the 1,500. There's the 1,500. Fine, that's better. Okay, and then the prepayment, we said 2 months were prepaid, so there we go. 2 months prepaid times 150 a month is 300. So 300 must go there, and 300 must go here as an adjustment on the last day of the month, year. So first, second, slash 2016 prepaid rates expenses general journal, because you're referencing that here. So there's the debit, there's the credit. So now you've actually closed off the account, because if you're looking at income and expenses have to be closed off to work out profit. So obviously if I had to total up this account, right, you're going to show the sum of the left and the right. So there's the one, okay, and if I sum up the other side, okay, you'll see the one side is bigger than the other, right? Because we start with a balance. They gave us a rates balance, meaning they gave us a balance on this specific account, meaning this account actually had an amount that was left over. You can see that the one side's bigger than the other. So the profit and loss is actually going to be a bit bigger because we're now balancing this account off, because the expense is going to be the 1,500 plus the 220 here, which gives us a slightly bigger amount. So the bigger amount is 2020, which I keep on that side. Okay, right, I'm going to just show this. This is the profit and loss asterisk for the paid rates. Okay, for the paid rates, just to show that explanation. Obviously these two amounts can be grouped together. You don't have to show them separately. You can show them as one amount. Right, but I wanted to show that as separate, just to show you that the one portion of it comes from the balance and the other comes from the amount that you actually paid. So this was the profit and loss. I can actually use the same working here, just with the different asterisks. This was for the balance. That's what you've got there. Great. So now we'll have a balance there of the 2020 minus this minus that, and you can see you'll have 220 there. But I would show this as 1. So if I copy and paste this just to show you what I mean, I'm going to show it like this. Equals this minus that. And that's what I would actually show for this particular account. Because remember, profit and loss is calculated, this would be general journal, GJ, for the rates account. So in the rates account, you'll have an opening balance, you'll have bank, you'll have the prepaid adjustment, and then you'll have one figure that goes to profit and loss. Okay, after showing it here as 2, it doesn't matter how you show it. Obviously, ideally, this is the best way of doing it because it's one adjustment. But just to highlight the working we had earlier, just to show you where those figures actually came from, I'm just showing it separately. But it's up to you how you want to show it, purely from an understanding point of view. As long as you understand what's happening, that's the most important. So I'm going to leave that there, and I'll leave that there as well, so you can see the two different options. This is the most correct option because you've only got one closing transfer. And in your profit and loss, so this figure here, profit and loss, earlier we showed the 1,500 because that's the one figure. We would also show another figure, which would be the sum of both, which would be what you would then show here, which, if I show a bracket for it, would be the 1,500 plus the 220 opening balance. And that's what you would actually show. So you would only reference that one figure in the actual profit and loss if you were asked to show the profit and loss. So that's something to consider. Let's go back up. So now we've done the rates, that's perfect, and we've looked at the prepaid, that's perfect. The next bit is to look at the motor expenses. So we know they paid motor expenses during the year, we recorded that. But now we can see that there's an amount that's outstanding, which is actually an accrued expense. It's an amount that's still owed, something that we haven't paid yet. If we haven't paid for something, that's representing a accrued expense, a liability, something that's outstanding. So let's write that. accrued motor expenses, bracket, it's a liability, so it'll have a credit balance. I don't have to put that in, we discussed it. Okay, I'm just going to show the actual adjustment. So this is owed. If it's owed, your expenses are too high, you need to increase your expenses. So I'm going to debit the expenses and credit the liability. So let's show that. 31st of the 1st, 2016, this was for accrued expenses, accrued motor expenses, general journal adjustment, and the amount that's outstanding is equal to 290. I'm going to show that. 290 is going to go here, and I'm going to show 31st of the 1st, 2016. This is motor expenses, okay, from the general journal. So there's your debit, there's your credit. Now you've captured that amount that's outstanding. Then we need to now show the closing off of this account to the income statement. So which side's bigger? If I add up those two amounts, I get 2340, which is fine. That's the bigger side. I want the bigger amount, so then I'm going to close off the motor expenses by finding the balancing figure, which is going to be my profit and loss for the year. So I'm going to show that profit and loss for the year, general journal, and I'm going to find the balancing figure, which is that total less that amount. And that gives me 2170. That's the profit and loss that comes from the motor expenses. If you're asked to draw profit and loss, which is here, then I'm going to show 31st of the 1st, 2016, motor expenses, brackets, what is the amount, or what was it? Oh, don't need to show any brackets, sorry. Oh, actually, well, I could if I wanted to show the split, but I'm not going to. I showed the split earlier. This one's not as bad because you're just showing one amount that is short an amount, so it's an additional amount that you're adding. Right, so you wouldn't really split it like we did earlier when we had a prepaid expense. So the motor expenses will equal that amount there. And that'll be the motor expense that you would show in your profit and loss account. Great, so that pretty much covers that question. Let's go back and check that we have covered everything. 1A said, write up the ledger accounts for rates and motor expenses for the year ended. Have I done that? Yes, there's rates, there's motor expenses. For the year ended 31st January 2016. Yes, that's correct. Then, show the amounts transferred to the income statement. Did we show the amounts transferred to the income statement? Yes, I showed it here, and I showed it there. That goes to the income statement. That goes to the income statement. That goes to the income statement. What else? They said, and the balance was brought down on 1st Feb 2016. So 1st Feb 2016, well, I've got 31st of the first year, which is actually the balance that you'll bring down. So what you could maybe do if you wanted to, is you could maybe balance the account off, and you could show a balance brought down, carried down, if you really want to, of the actual amount. So you'd obviously have accrued expenses, which will be carried down, brought down. So I'm just going to show balance carried down, balance brought down, balance carried down, balance brought down, and then I'll show 1st of the 2nd 2016, balance brought down, and the same thing on this side, and the missing figure would obviously be the 290. Okay, obviously if you had other adjustments you would then show it, but we don't. We've just got the one, and that's pretty much it for the first question, first one, which is 1A. Then we need to look at B. B says Paul's income statement for the year ended 31st January 2016 has not been adjusted for the 75 Rand rent receivable prepaid. State how his capital will be affected when this error is corrected. So let's interpret what happened. Okay, so this is 1A. Now we need to discuss 1B. 1B. Okay, so we need to interpret. They said Paul's income statement for the year ended has not been adjusted. So they've omitted something, which was 75 rent receivable prepaid. Okay, so rent receivable receivable prepaid. That's what they've given us. They said rent receivable prepaid. So if it's rent receivable and it's prepaid, rent receivable meaning it's an amount that's receivable. Rent is receivable, but it's prepaid. Rent receivable prepaid. Okay, it's a very strange way of referring to it, because is rent an expense? If rent was an expense, so if you have rent expense prepaid, okay, that means that you've prepaid for an expense that you've got. Okay, that's fine. That's not what they've asked you in this question. This question said rent receivable prepaid. So that should be income then. Well, relating to income, because it's prepaid. We're looking at the rent that's receivable, so maybe just to put a note here, rent that is receivable, okay, rent receivable would be rent that is outstanding, from my interpretation of what the word means. Rent receivable. So if something is receivable, it means it's going to be collected. So if it's collected, this must be referring to rent income. Rent income. So if rent income is prepaid, this is prepaid income. So prepaid income would be seen as something like income received in advance. Prepaid income would be the same as income received in advance, which would be a liability. So different textbooks refer to it differently. So you get rent received, and you get rent receivable, and you get rent prepaid. It all depends what the actual account is. We need to identify what the account is before we can actually recognize it. So now I know that rent receivable prepaid, meaning rent receivable, I'm going to collect it eventually, is prepaid. So that means that it's income that you've already received. That's my interpretation of what they've mentioned, because the question said Paul's income statement for the year ended 31st January has not been adjusted for the 75 Rand rent receivable prepaid. That's what they're giving you in the information. So now, having read that, they want to know, state how his capital will be affected when this error is corrected. Right, so currently this is not accounted for. Right, so this is not being accounted for. That means prepaid income or income received in advance is not being shown. Okay, so that means you are not showing prepaid income / income received in advance. That's what they're stating. So that means you're not showing a liability. Right, if you're not showing a liability, that means your income is overstated. Okay, because remember, how do you create income received in advance or prepaid income? You would have to reduce the income. So you would debit the income and you have to credit the liability, which is the income received in advance, right, the prepaid income. So that's what you're doing. So if I'm not showing the liability and my income is overstated, when the adjustment is captured, you will reduce income, okay, which affects profit. So they said capital, so the capital, which is basically the equity, owner's equity, will reduce. Okay, because you're going to reduce income. If I reduce income, it's going to reduce profit. If I reduce profit, it's going to reduce owner's equity. And that's for 2 marks. So it's mainly theory. They're asking you what will happen when you process that adjustment. And that's question number 1. This is the end of question 1. Thanks for watching the video. Please subscribe to the channel and leave a comment below. And if you liked the video, hit the thumbs up button, and we'll keep creating more videos to help you.